This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Stocks retreat and oil prices drop, extending last week's ugly performance as investors look ahead to this week's meeting of the Federal Reserve.
The bond king, Bill Gross, in his first television interview since abruptly leaving PIMCO, the firm he founded. He talks about his new job and the investment he says looks great.
And crunch time. Those health exchange websites are being put to the test as people try to meet today's deadline to get insurance by the start of the year. We have all that and more tonight on Nightly Business Report for Monday, December 15th.
Good evening, everyone, and welcome. A real reversal of fortune on Wall Street today with wild swings in stocks just ahead of this week's closely watched Federal Reserve policy meeting. Stocks shot higher at the opening bell. Oil prices moved up, too, but then oil hit a slick and started to slide again, largely on worries the global economy, outside of the U.S., that is slowing so much that demand will fall and prices will follow. Down goes oil, down go stocks. At the closing bell, stocks extended last week's declines with another big loss for the Dow, falling 100 points. The Nasdaq lower by 48, more than 1% slide there, and the S&P lost 12 points, dipping back below the 2,000 mark. Now, crude oil fell to fresh multi-year lows again today, with domestic light sweet crude down nearly $2 to finish the day below $56 a barrel.
While stocks and commodities struggle, Bill Gross, one of the biggest names in bond investing, is speaking out in his first television interview since his high-profile departure from PIMCO in September. And he has a lot to say about the Federal Reserve, inflation-protected securities, and his new firm. Brian Sullivan has more with Bond King Bill Gross.
Back on September 26, Bill Gross shocked the investing world by leaving the firm he founded, PIMCO, to come to Janus Capital Group. So we traveled to Denver, Colorado, to Janus Capital Group's headquarters for the first TV exclusive interview with Bill Gross. And I began by asking him, with everything that had been written and said about him, if he didn't feel a bit misunderstood.
I think the vast majority of the public understands exactly who I am. Like I suggested, for the past 25 years, my investment outlooks, they know what's inside of Bill Gross. And so I think they have a sense that they know that that will continue as well.
And with a man known as the Bond King, you of course have to talk to financial markets. And it's a big week. You've got the Federal Reserve, but you've also got the steep drop in the price of oil. And I asked Gross, is he watching the price of oil these days? Here's what he said.
Oil determines currency movements. Currency movements determine spread markets, risk markets, high-yield markets, the potential for bankruptcy or solvency, not only with companies but countries. And so once you have a major commodity like oil that affects not just the real economy but the financial economy in motion, like it has been, moving down rapidly, then financial markets try and readjust.
And we wanted investing advice. In fact, I asked Bill what he thought was some of the better investment ideas right now. Here was his tip.
The tips look great.
Treasury inflation-protected securities.
Yes,
is this where this interview is going to go, Bill?
Yes.
Tips?
They've moved violently to the downside in terms of price and in terms of what they call the break-even inflation rate. You can buy a 10-year tip now with an inflation expectation of about 1.5%. The Fed's target is 2%. And, to not buy a tip at 1.5% break-even is to suggest that the Fed simply can't reach their objective, that they can't print enough money. I think they can, and to the extent that inflation goes to 2, then a tip is going to benefit, if only because it's defensive as opposed to offensive.
So Bill Gross, in his first TV interview with CNBC since leaving PIMCO, says he likes Treasury inflation-protected securities. He's concerned about the price of oil, and indeed he feels just a bit misunderstood. From Denver, Colorado at Janus Capital Group, I'm Brian Sullivan for NBR.
Our next guest has been closely following the saga of Bill Gross and PIMCO, broken many of the news nuggets as a part of it in today's Wall Street Journal. In fact, he writes that the two, that is PIMCO and Gross, seem to be getting over their ugly divorce. Greg Zuckerman joins us now to discuss how PIMCO is doing since the exit of its founder and once star fund manager. He's a special writer for the Wall Street Journal. Greg, always good to see you. Has PIMCO sort of steadied the ship after all of the heavy withdrawals that they went through?
Yeah, I really think so, Tyler. I mean, it was an ugly divorce. You could argue maybe that they're both getting over it. Maybe it's not happy ever after for both of them, but they're both moving on. So PIMCO isn't losing nearly as much money as it used to. Clients aren't fleeing. And what I found really impressive is their performance has been quite respectable, even impressive, because all this money was coming out and everyone on Wall Street was betting that they'd have to be selling bonds and it would hurt performance. And what we write in today's story is they sort of did these maneuvers, pretty aggressive maneuvers behind the scenes, where they ended up buying some cheap bonds and profiting from that and selling the kinds of things people didn't expect, like treasuries. So all in all, PIMCO's doing quite well. And as we see from Mr. Gross today, he's moving on as well.
So from an investor's point of view, Greg, and I don't know if you can really answer this, is that if you stayed with PIMCO, were you better off than following Bill Gross over to Janus?
That's a good question. Yeah, you would be better off. They're not so comparable because at Janus, Bill Gross is doing an unconstrained bond fund. In other words, he can bet on bonds and he can bet against bonds. He can short them almost like a hedge fund, whereas his old fund, the total return fund, just buys and holds bonds. So they're not really apples to apples, but the total return fund has done quite well. It's beating 99% of its competitors over the last month or so. You know, long term, we'll see how that lasts. And Bill Gross obviously is one of the most acclaimed and respected investors of all time. But so far, so good for investors who stuck with PIMCO.
So if I'd stayed, I would have been paid to stay. Was Gross unfairly tarred for his performance in the years leading up, or the quarters leading up to his departure? As I understood it, there was one bad year where he actually lost money for the first time, but even in that year, he was outperforming his peer group.
Yeah, I wouldn't say unfairly tarred. Here's a guy who's about 70 years of age. He's had employees, colleagues that we've written about, just unhappy to work there. It's not a conducive environment long-term to top performance. He's underperformed relative to peers or relative to his indexes, especially relative to his amazing career. So yeah, he's not a guy who you want to bet against, and he'll do quite well at Janus. But I think all in all, it's been a good break for both of them. PIMCO's moved on. They've got some pretty good investment professionals who got overshadowed while Mr. Gross was there, and Bill's doing quite well over at Janus.
You know, I was fascinated reading your article, Greg, about, you know, just some of the anecdotal stuff that's going on, the culture of PIMCO. A lot of the people were happy that Bill Gross wasn't at the Christmas party. The organization of the trading room, the way the desks are, all of that. I mean, to what extent does the change of the culture impact the performance? Reading between the lines, what was your take?
Well, it's a good question. I mean, for years, there was something of a miserable environment there, and the performance was extraordinary. So you don't want to get too carried away. It's like the Yankees back in the day. They were all hating each other, and they won championships. So morale helps to some extent, but performance is much more important. But I think it's created a more relaxed environment, which can be conducive to smart investment process and picks. So I do think people are happier there. Their morale is better. Bill was a fascinating guy, an amazing investor, but sometimes he rubbed people the wrong way.
All right, Greg, thank you very much. Always good to see you. Greg Zuckerman with the Wall Street Journal. And a surprise move by the Russian central bank late today. It hiked its key interest rate to 17% from 10.5%. In a statement, the central bank cited the rising devaluation of the ruble and inflation risks. The ruble fell to a record low against the dollar today. It has just been tumbling. And just last Thursday, Russia hiked rates to 10.5% to combat inflation.
Back here in the U.S., despite today's sell-off in the markets, there was good news about U.S. manufacturing, which is now outpacing pre-recession levels. Industrial production last month was much higher than expected, up 1.3%, thanks in part to peak auto production.
Today is a big day for the Obama administration. It is the deadline for individuals to sign up for a health insurance plan under the Affordable Care Act and be covered by it starting January 1st. Bertha Coombs takes a look at this year's rollout and how many Americans have already signed up for a plan.
At Oscar Insurance in New York, even the co-CEO was manning phones to handle last-minute enrollment calls.
Let's start by taking some information from you.
The government health exchange websites are working well this year, meeting the deadline surge for January 1st coverage. But Oscar is proactively reaching out to enrollees.
The information you can find about plans on the site still isn't sort of where it should be. There still isn't a plan wizard or chooser wizard of sorts where you can go in and say, I have these and these conditions, I would like to see these and these doctors.
For small and large insurers alike, the real challenge this year is going to be processing re-enrollments in time for January 1st coverage. The back end of the federal exchange, healthcare.gov, still isn't built out enough to notify insurers automatically about people who come in and re-enroll or switch plans. So federal officials have been sending the plans lists of enrollees over the last couple of weeks, which insurers have been comparing with their 2014 enrollment files. The real test will come this week with the surge in volume.
There will be a significant amount of information that does come from tonight over the next few days and week, and that the plans are going to be working through that very, very quickly. But it's helped to have information come in a staged way.
As of December 13th, nearly 2 million had signed up. About half had actively re-enrolled. But Mario Schlosser says it pays to review new plan and subsidy options.
Ask them questions about what will this particular procedure or condition cost me when I become a member of Oscar or another insurance company. I think only that way you can really realize whether the insurance company is going to deliver a great service to you.
Those who do nothing will be auto-renewed, but may find themselves paying more than if they'd switched. Bertha Coombs, Nightly Business Report, New York.
Still ahead, how's the holiday shopping season shaping up for one of the country's major retailers? An interview with the CEO of Macy from the C-suite next. Good news for drivers. GasBuddy.com reports that gasoline can now be found for less than $2 a gallon in 13 states, from Virginia to New Mexico. Now, if you've ever wondered where your money goes for each gallon of gas you buy, the government's Energy Information Agency breaks it down. Now, right off the bat, 13% of every dollar spent goes to taxes, with New York and Connecticut charging the most. 15% pays for marketing and distribution, including trucking that gas to the station. 8% goes to paying for refining costs of turning crude oil into gasoline. And the biggest cost of all, 63% of every dollar goes to pay for that crude oil. Now, profits for gas station owners after paying rent, salaries, rental equipment fees, and the like usually work out to just a few pennies per gallon.
With fuel costs steadily heading lower and airlines pulling in record profits, should airfares be less these days? Senator Chuck Schumer of New York thinks so.
Oil prices have gone down dramatically, from over $100 a barrel to $60 a barrel. That's had airline profits go way up. Why are the ticket prices going up as well? That is just really unfair and wrong.
Schumer wants the Justice Department and the Department of Transportation to investigate why airfares are so high and why some carriers are still tacking on a fuel surcharge.
We begin tonight's Market Focus with the largest private equity buyout of the year. PetSmart has agreed to be acquired by a group of investors led by BC Partners for nearly $9 billion. This group will pay $83 a share for the pet supply retailer. Activist investor Jana Partners had been pressuring the company to put itself up for sale. Shares of PetSmart rose 4% to $80.97. Riverbed Technology also agreeing to be acquired by a private equity firm. Thoma Bravo will buy the telecom equipment company for about $3 billion. The deal comes about a year after the company's biggest shareholder, Elliott Management, pushed for a sale. Riverbed rose 8% to $20.31. Pfizer enters into a deal with OPKO Health. The two companies will develop and commercialize OPKO's growth hormone treatment that could replace daily injections with weekly ones. The partnership is part of Pfizer's increased focus on rare diseases. Pfizer also announced plans to raise its quarterly dividend. OPKO Health gained 8% to $8.86. Shares of Pfizer fell slightly to $30.86.
A Coca-Cola shareholder is criticizing the company's chief executive. Wintergreen Advisors, a minority shareholder, said Muhtar Kent should be replaced because he's, quote, incapable of leading Coke's turnaround, end quote. Wintergreen has been critical of the company's executive compensation plan, among other things, says shares are deeply discounted because of poor management and governance. Separately, Coke said it sees steady growth coming. Next year, 2015, Coke shares fell nearly 1% to 40.57. Alcoa announces plans to further expand its aerospace business. The company is buying a privately held German titanium manufacturer, which makes parts for aircraft engines. The move is part of Alcoa's shift away from mining and smelting aluminum. Shares of Alcoa rose fractionally to $14.93. And in its annual revenue outlook for next year, the industrial conglomerate Honeywell gave a conservative forecast for 2015, saying it expects only modest economic growth around the world for the year. Shares today fell just a bit, 95.81.
Only 9 more shopping days until Christmas, and retailers are going all out to ring up holiday sales, including Macy's. The iconic department store, headquartered in New York City's Herald Square, has hired 86,000 temporary workers and is pushing sales and special promotions not only at its 850 stores, but also online. Macy's is now the 8th largest internet company in the U.S. after Netflix. As we continue our series From the C-Suite, we hear tonight from Macy's CEO, Terry Lundgren.
This is my baby right here, you know. This is Macy's Herald Square.
Terry Lundgren is having his own miracle on 34th Street. Since he took over as CEO of Macy's a decade ago, he's increased sales to $28 billion, doubled the stock price, and spruced up the New York City flagship store with a massive $400 million makeover, the most expensive renovation in the company's 111-year history. The payoff will depend on consumers spending money. There were thousands waiting online for hours on Thanksgiving Day to get a jump on holiday bargains.
We had the biggest Black Friday ever. This is an exciting time for us because we always kind of pace the season on how it looks on this very, very busy day. And we had a great Macy's Thanksgiving Day parade, followed by 15,000 people outside of Herald Square waiting to get in. We opened the doors, so we're off to a good start.
And when you talk to Macy's customers, what's your sense of how they feel about spending? Are they feeling free spending, or are they stingy with their money?
Oh, I definitely would say the consumer is very focused on value, and the consumer is thinking about how do I get the most for the money that I have here to spend, whether it be on gifts or whether it be for themselves. And I think that's been a trend that continues to be that way. And actually, companies like Macy's benefit from that because we have all of the core brands, but yet we're constantly making sure that we're offering the best value.
You must feel so much pressure to offer these bargain deals to beat out your competitors.
Well, you have to be sharp, you know, and the consumer can see everything today, more than ever. I mean, you know, using their phone, they can quickly determine whether this product ought to be at that price or they can find it somewhere else. And so, you know, you just have to be on your toes and be totally focused on making sure you're always giving great value. There's no hiding.
Are you finding that lower gasoline prices are making a difference on how much consumers are spending right now?
The consumer has to fill up his and her gas tank a few times before they start to realize that there's more money in their pocket. That's really just beginning. It just hit the gas pumps just recently. But I do believe over time this will be a positive for the consumers and therefore a positive for consumption, and obviously we'll get our share of that.
You know, a lot of people are very worried about a data breach and having a repeat of what happened with Target last year. Are you noticing that people are using more cash than credit cards or debit cards?
We haven't seen that trend change. About half of our business is transacted on our own Macy's and Bloomingdale's credit cards, and so we would see that pretty quickly, and we haven't seen that change yet.
Terry, about every week we hear of some big retailer that's gotten hacked. How worried are you about Macy's getting hacked?
I think any CEO who's in a position of having consumer data, it's on our mind. You know, this is something that we take very, very seriously. What I always think about is what are we doing in terms of preparedness in the event that something like this would happen? I think you have to always be on edge. You have to always believe that they're coming at you from every angle, and we're going to do everything we can possibly do, and we're investing significantly to make sure it doesn't happen.
Let's talk a little bit about the economy. We're getting more and more evidence that the job market is stronger. From your perspective, how's the economy doing?
I think the economy has been sluggish. It's been slow, and we've all been hopeful that there would be faster GDP growth than what we have seen. But the signs are looking positive as you look out. I mean, not robust, but certainly better in 15 than I think what we've experienced in 14.
As the CEO of a major retailer, what do you look at? What do you monitor that gives you a temperature about how the economy is doing?
I look for where consumers are spending, what the trends are of consumer spending, the size of their basket, the kinds of items that they're buying. You know, when you can buy a handbag and you can use that handbag and carry it, 5 days a week if you want, as opposed to an apparel outfit that you change quite often. I mean, that's a sign of a consumer focusing on value and getting the most out of their money.
It's interesting that at a time when everybody is so worried about the global economy, Macy's is announcing these expansion plans to open stores overseas. Why are you confident about that?
You can't just focus on today and think that's going to forever be that way. You just have to believe, where is their growth? Where is their opportunity? And then think in terms of 5 and 10 and 15 years in advance. I mean, I'm very confident that the decisions that we're making both here and in other countries in terms of potential locations for Macy's and Bloomingdale's are very solid and built to last for the long term.
Will higher interest rates make you think twice about some of your expansion plans or hiring more people?
I will not do anything differently based on very slight interest rate growth. It's not going to be a material difference to me in my decision making for the next 10 years. I believe that if interest rates are rising, it's only because the strength of the economy is evident. And if the strength of the economy is evident, companies as large as Macy's will benefit from a stronger economy.
Well, as for the Federal Reserve's policy meeting this week, Lundgren believes the Fed will begin raising interest rates in the fall of 2015, not in the spring. And to watch the extended version of my interview with Terry Lundgren, go to our website, nbr.com.
And coming up, it's been a very profitable year for America's dairy farmers, but can the industry continue to be, you knew it was coming, a cash cow? That story next.
A real shakeup at Bob Evans Farms today. Its longtime CEO is leaving the restaurant chain effective immediately. The Wall Street Journal says Steve Davis resigned under pressure from the board, which just wrapped up a proxy fight with an activist investor. He's been pushing for the firm to either sell or spin off its food products business, among other changes.
The folks at Bob Evans Farms may also be upset about the price of milk and other dairy products, which hit new all-time highs this year. So what does soaring dairy prices mean for U.S. farmers? Morgan Brennan has our story.
So how long have you had this farm?
My family started this farm in 1961.
Mitch Brunig of Mystic Valley Dairy in Sauk City, Wisconsin is having a good year. The price of raw milk, cheese, and butter all hit new highs in 2014 after production slowed in every major milk producing region in the world, except the U.S. Dairy exports grew to their largest value ever in the first half of the year. And with lower feed prices, the windfall farmers have seen is allowing them to reinvest in their operations.
It's allowed us to sort of, do some maintenance and updating on some of our equipment that maybe didn't get to be updated when the prices weren't as good. We're going to have some money stored so we can work off of that and not have to go back in debt.
And that's important because production levels have been returning in other countries. China put its dairy purchasing program on hold, and perhaps most importantly, the U.S. dollar has rallied to a multi-year high, making American milk more expensive overseas.
Exports have a large influence on the price, and it's been a very good period for the United States in terms of exports, and Wisconsin exports have grown significantly over the last few years.
The U.S. Dairy Export Council says exports have already started falling. This quarter, it projects a 20% decline in volumes and a 30% drop in value. Nearly 20% of U.S. milk goes overseas. Without international growth, this steady supply, a cow always has to be milked, can push prices down and fast.
We're anticipating for 2015 that to average out to about $16.50 per 100 pounds. So that's a significant drop, but that $16.50 per 100 pounds is historically a reasonable Class 3 price, given what the current grain markets are.
That's why some farmers are focusing on genetics. At Mystic Valley Dairy, Brunig is developing cow embryos to sell to China.
It's allowing us to have another form of income and not have to milk more cows. So just diversification is a really good thing, and so diversification helps us sort of weather if the milk price is higher, the milk price is low. We sort of have other options to help our business.
Still, despite those falling prices, economists expect 2015 to be another profitable year. Keeping these gals cash cows. For CNBC Business News, I'm Morgan Brennan, Sauk City, Wisconsin.
And Tyler just wants to go milk one of those cows.
I do. It looks fun, actually.
That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks for watching.
And I'm Tyler Matheson. Have a great evening, everybody. Please come and see us again tomorrow night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. Just ahead of this week's closely watched Federal Reserve policy meeting, stocks continue to sell off as the price of oil fell to another 5.5-year low, ending below $56 a barrel on worries about a global glut. The Dow lost 100 points, the Nasdaq lower by 48, and the S&P down 12 points, dipping back below the 2,000 mark. GasBuddy.com says gasoline can now be found for less than $2 a gallon in 13 states. In the largest private equity buyout of the year, PetSmart will be acquired for nearly $9 billion. And with just days to go before Christmas, the U.S. Postal Service says Americans will mail a record 640 million cards, letters, and packages today. Be sure to tune into Nightly Business Report right here on your public television station.